What's up traders, welcome to Failure to Displace. In this video we're going to do a quick run through of yesterday, so Wednesday's London morning session on the two macros that I trade, just to break down of price action and how I read the session. So we're going to start on TradingView here. So the normal routine is to mark out the previous day's value area high, point of control and value area low. So they were marked out as I came to the charts at 1:30. You see here midnight open. So we know my initial bias is to check for initial buy side and initial sell side. So a sweep of buy side and then a sweep of sell side. We swept buy side prior to me coming to the charts. So I come to the charts at 6:30, which is here, or 1:30 New York time. So that's 6:30 AM here in the UK. So we'd swept the buy side. After this sweep, I would have been looking to go short to sweep initial sell side. However, you can see price found support at previous day's point of control. Thing to note above us, again, as an additional draw on liquidity, is the new day opening gap. So that was the opening gap between the close of Tuesday's session and the open of Wednesday's session in Asia. So we have a gap above us, which again is going to be a primary draw on liquidity when you come to the chart. So we can see we didn't have the momentum to sweep out initial sell side after taking buy side out. We found support at the previous day's point of control and price began to reverse at that point, which would give you then a draw on liquidity to rotate from previous day's point of control up to previous day's value area high and the new day opening gap as well. So coming into 6:30, or 1:30 I should say, New York time, I had a bullish bias, expecting at least a rotation up to previous day's value area high. So let's just zoom into the price action here. So there was nothing that I really would have taken in this first macro. So the first macro that I was monitoring is 150 through to 210. There was a setup, if you were really trying to force things, there was a setup here that you could have argued for. However, as this setup was in the middle of the range, I didn't feel confident taking this. It could have gone either way. We could have gone for another retest of point of control or up to the previous day's value area high. However, we can see that we did have the macro opened. We had a manipulation lower. So the macro opened. We kind of dropped lower to sweep some sell side liquidity. So we had an aggressive move down. And then we had an aggressive move back in the range. So we left the bearish fair value gap at this point. We pulled back down. We left another bearish fair value gap here. And then this was retraced through with a good rejection candle and a bullish fair value gap. So where these two fair value gaps overlap, this is a BPR. So the BPR is one of the most powerful signatures in price that I look for a reversal. So price came up. Had this not taken out this high, so if we'd have just retraced from this candle here, I would have taken a BPR entry. But because we had swept this liquidity here on this move up, I didn't have the confidence to take this entry long from the BPR. So that would have been a trade for me, going for previous day value area high inside the macro, if we hadn't have swept that liquidity, because we'd have basically generated relative equal highs here. So I would have had a point of interest to be able to either go break even or indeed take my first take profit, because the entry would have been from the BPR, stop loss covering the low. So you got a 6-point stop loss. I take my profits at 10 points. So my TP, would have been just sweeping these highs. But this little wick outside of the liquidity here, that didn't give me the confidence to take this for a long trade. You'll also see here that we had no divergence candles or CVD divergence highlighted here. So let's just jump to trade of it just so we can look at this price action. So the price action that we're looking at is this sweep here. So we swept the low with a good rejection candle. It would have been nice if that was a divergence candle. So if we could have seen here sellers really pushing into this level and it finished as a bullish candle, that would have been an entry. Or indeed, if this return into the balanced price range, again, if we saw absorption here, so if we saw this as having bearish delta, but the candle finishing bullish, that again would have been a signal to go long. But we didn't. The only time we got the divergence candle was up here after we began retracing, and that was at 216. So this candle here was at 216, and it was outside of the macro window. So I would have wanted to either see CVD divergence, so seeing delta absorption between these lows, but we can see we made a lower low here on trade of 8 and then a higher low gain on delta. So we had no absorption on CVD, and then we didn't have any divergence candles as an additional level of confluence, and then we'd already swept that high. So there's a few things making this not an A+ setup. We're in the middle of the range. It could have gone for point of control, it could have gone to value area high, and then I didn't see additional levels of confluence for me to take that entry long. So although this was a valid ICT setup, in my opinion, it wasn't one of my A+ setups because it didn't have the delta signatures that I was looking for. So we can move forward to the next macro. We'll just jump back to trading view here. We can see price does rotate up. This blue line is our VWAP, so again this is a point of interest for us. So these three areas are all kind of converging. We can see price comes up at 230. We get an injection of volume. This essentially is a manipulation higher into previous day value area high. We get consolidation over this fair value gap. So at this point, as we were watching price, this is a bullish fair value gap, and you can see that it's acting as support. So price is unable to break through this fair value gap. We are seeing at this high levels of absorption. So CVD divergence is coming through. So we can see here we're making a higher low on price, whereas, let me just move this line because it's moved, delta is getting higher. So we can see there's lots of market buys coming into this area, into this level. So this is buyers trying to buy this level, but the candles are closing bearish. Now they are closing bearish over this level, so this isn't an entry. Seeing divergence candles and seeing CVD divergence in this area, we're still getting support on the fair value gap. So I need to see an ICT setup play out. So this develops as we get this displacement back through the level with this bearish candle. Go back to the single screen. We displace through the fair value gap and we get a CISD, so a change in the state of delivery. So this now, on this move lower, confirms this as an inversion fair value gap. It confirms this 1, 2 bullish candles here as a bearish order block. So we don't expect price to break this high. This order block should hold price down. And then we do have CVD divergence on this pullback into the inversion fair value gap inside our macro at 250 to 310. And then on top of an additional confluence, as we get into this level, we'll get a divergence candle as well, showing us the absorption. So let's just take a quick look at this. So you can see at the high, we get this divergence candle. It then breaks lower with a fair value gap. Now my entry is on the divergence candle in the macro. So I've already got my ICT set up. I'm already expecting this inversion fair value gap and order block to hold price lower or to hold price down. It's touching the previous day value area high, so this is obviously a key area of interest for me as well. I will note as well, although we missed new day opening gap here, on ES did tap the new day opening gap. So again, slight SMT at that point, as in ES has maybe fulfilled its target and then can drop away, so that will drag NASDAQ down. So it didn't have to get this level. We got close enough for my liking. This is our first divergence candle, which is the short trade. The stop needs to go above the high. So because of the CVD divergence, we're expecting this to be the protected high here. absorption is happening in this level. So there's lots of buyers trying to buy this up, and there is a big limit order, a big seller at this point absorbing all of the buys in this area. So we don't expect them to let price go over that high. It's only a 5-point stop loss. Entries inside the fair value gap. You've got clear levels of liquidity to target. So some nice internal liquidity here. And as I mentioned before, you expect a rotation from the value areas. So we're unable to break through value area high. You would expect price to rotate to value area low of the previous day. And you can see it does perfectly. So we get the rotation down. We find some support at point of control. So again, this is always an area where you're going to be looking at either taking the risk off by going break even or taking profit. And ultimately price does come back down to reach previous day value area low and ultimately back into the new week opening gap. Just to show you the power of the levels, I guess, you can see we're inside, finding support around value area low. We break below, retest it as resistance, come back down again to a new day opening gap. You can see how price, whenever it hits that level, is giving you an indication of what it would like to do prior to moving on. So that's how I reviewed London yesterday, Wednesday, the 27th of November. It was the macro number 2 rejection from previous day value area high, giving us delta divergences along with our ICT setup, so additional confirmation here to say that price was going to go lower. And when we time this right inside the macro, you can see these are the types of trades that we want to be involved in, where price just immediately drops away, showing that we're on the right side, which is why I'm very aggressive with moving my stops to break even, etc. With when you're trading Apex with the trailing drawdown, you don't have the luxury of being able to sit in trades for a long time hoping that they're going to play out, enduring pullbacks, etc. For me, I just want to take my 10 points, get the trade closed out. So I hope you found that useful. Another quick breakdown of how I would view the London session and how I approach it using volume, using delta and ICT all combined together. So I hope you found it useful. If you did, please drop the video a like. Don't forget to subscribe if you're enjoying this kind of content so you don't miss out on any future videos. And if you have any comments or feedback, leave them down below. It'd be great to hear from you, and it will tell me as well what kind of things I need to look at for you guys in future videos. Thanks for watching. I'll see you again in the next video.